After the feedback from the institutions here at the conference, we'll take any regulation. Give us anything. I mean, we're going to make the assumption, because it's bipartisan and they've taken so much input from the industry, that we'll get something that's workable. It may not be perfect, but the reason you care as an investor, the reason you would want Lummis to be successful, or Haggerty, is that the institutional capital is like a giant dam of a wall of money that can't invest yet. So it's a spigot of capital in the trillions of dollars. Not a dime of it has been put into crypto yet. Can you imagine what would happen to asset values if they start to allocate? That's the investment
thesis.
There
has been some institutional invest interest.
Practically zero.
According to Jason Urban from Galaxy Digital, he says we're in the second inning of institutional interest.
I share his optimism, but I would call it, we're not even in the game yet.
Wow.
When you talk to sovereign wealth and large pension, nothing.
Okay, so you're saying
he's talking from look. They're small. Primarily, it's private wealth, family wealth. It's hedge funds. It's certain smaller institutions that used to buy the publicly trading shares of Bitcoin miners, but now they're worried about the carbon audit issue. I don't see it yet. What we really need is the SEC and the U.S. regulator to make policy. And then the allocations will start, primarily in Bitcoin, probably 50 basis points.
So what would be that watershed moment? What needs to happen for all of these institutions that you say are just waiting for clarity, for them to get that clarity?
The easiest way to do it would be to do what the Canadians did and simply allow the first American-traded Bitcoin ETF, which could be purchased as a security into mandates that are already set up to purchase securities, like shares. Because they don't have to buy Bitcoin, they don't have to set up a separate wallet. They could simply say, okay, here is a true ETF with the underlying actual Bitcoin.
Right.
And we can simply allocate 50 basis points to a $100 billion mandate. We can buy the ETF. That would be the easiest path to take. My guess is they're not going to allow that. There's multiple applications for that ETF, of which none have been granted.
Just had Kathy Wood's one rejected very recently.
Exactly. And so it doesn't matter which one is actually licensed, because there'll be 10 more that will come immediately. But we're going to need an order from the regulator to allow institutions to be compliant when they buy Bitcoin itself.
And you think the first step towards that order would be the approval by the SEC of a spot ETF?
Yes.
That gets the spigot open?
It starts the spigot open. If that happened, it would be like what happened in Canada. To me, Canada is like a regulatory fishbowl. You test stuff there. and it's working. Nobody's been harmed by that ETF. And now they've got an ETF with Ethereum in it. And institutional clients in Canada and individual investors can put it into their portfolios.
Right.
And they are doing that. Billions of dollars worth of it has been allocated. But we need it to come from the regulator in the U.S. because so much of the regulation around the world in other jurisdictions is based on SEC. And so I like what Haggerty's doing by saying, let's not try and solve all the world's problems. Let's just pick one asset in crypto. The easiest would be stablecoins. That may be the first to move. That would signal, and certainly the fact that this bill is out there would signal that there's an interest. And Toomey was on the air today saying the same thing. It's a good asset. The great thing about getting stablecoin nailed down on a regulatory basis in the U.S. is that it creates a global currency backed by the U.S. dollar. It keeps the U.S. dollar as the currency of reference globally. And I don't know why regulators and lawmakers in the U.S. wouldn't want that. They can do it with the sign of a pen, and everybody would get behind USDC or some other stablecoin, or maybe multiple stablecoins, but they're all backed by the U.S. dollar.
Is that the same as FedCoin?
No. FedCoin would mean that you're asking the federal government to actually sit down and code, which they're not going to do. That's never going to happen. They don't have the innovation. The government doesn't create innovation. The private sector does. USDC, stablecoins, all of them are software. You need innovation to create that.
But we already have stable coins out there.
That was written by...
Pegged to the dollar. You're saying it should be officially backed by the government.
The government should regulate, and the industry, the crypto industry we're sitting in the middle of here today, should innovate. That's how it should work. And so what I would like to see is the government license 10 stable coins, just like there's a mutual fund from Schwab. There's one from Fidelity. They compete. I'll buy 4 or 5 of them, get diversity. There'll be slight nuances, slight differences. Maybe the interest rates on lending is slightly different. I just want competition from the ability to innovate and keep it stateside, make it backed by the US dollar, make the policy simple, make it transparent, make it auditable, and make it so that the assets that are underlying are not more than 12 months in duration.
What impact does that have on Bitcoin?
It would advance the value of Bitcoin in the sense they'd know regulation's coming. You're not going to regulate stablecoin and not Bitcoin. You're going to do both. The whole theme of this conference this year is regulation is coming and it's a good thing.
Okay.
That's the investment thesis.
And it's a good thing. Well, it's one of the reasons that we know that politicians have been getting behind this is because it's a tremendous cash cow in terms of taxes. And we heard from Yellen today saying taxpayers should receive the same type of tax reporting on digital asset transactions that they receive for transactions in stocks and bonds so that they have the information they need to report their income to the IRS. You saying this is a good thing?
100%. And if I could be the industry spokesperson for just a moment, we agree, and we're going to do that. All the companies that I'm involved with in centralized and decentralized, like WonderFi, for example, which is under the Canadian order, we are already writing that code. We are going to be 100% compliant on tax reporting in every jurisdiction we're licensed in. I 100% agree with her. The industry wants to be compliant on that. Tax is, we understand we have to pay taxes, and we're all okay with that. Now, there may be some cowboy outlier that doesn't want to be controlled by a government. That's not me. That's not the industry. We want to be compliant so that we can have the opportunity to allow institutions to invest along beside us. That's going to provide the stability and the appreciation in value.
Let me take it to a philosophical angle.
Yeah.
Because you could argue that all of this institutional interest, all of this industry participation, in a way, is antithetical to the decentralized nature of Bitcoin. That Bitcoin is supposed to be more of a form of money or store of value asset for the people, and that if we bring in all of this traditional finance into this precious new world of Bitcoin, we're really just essentially recreating the same mess or bad scenario that we're trying to get away from. What would you say to that? If we bring in these structured products and derivatives, and keeping in mind that that's how we got into the financial crisis, when you have structured products on top of a supposedly stable asset, does it in fact jeopardize the integrity of Bitcoin and the whole philosophical mission of Bitcoin?
The answer is no. And I'll explain why. The majority of the world's wealth is tied up in sovereign funds and pension plans. They vote with their investments. They want regulation. They want stability. They want transparency. They're willing to work as they have for hundreds of years on providing security to people that trust them to manage their money. And if there's innovation and technology available in financial services, it's coming through crypto. This is an augmentation to an existing system that has trillions of dollars in it. It's not a new system. It's a system that makes the existing system way better. That's the way you have to view it as an investor. And so all we want is to be compliant within the existing ways. We don't need to change everything overnight. That's not the way to think about Bitcoin or the entire crypto industry. It's to take the innovation that exists here and augment the existing system to make it better for people. And I'll give you an example. Stablecoins could change the entire FX industry and make it far more transparent, far cheaper, far faster. Solana blockchain could accelerate transactions 100x that are already, it takes you days to get your money moved from one bank account to another in a foreign country. How inefficient is that? It could be fixed overnight. You can't do it without regulation. Let's embrace regulation. Now, there are other voices within crypto that want to rage against the machine. That's not my voice. My voice is let's work with regulators. Let's make this a multi-trillion-dollar industry. Let's make this better for every person on earth and provide transparency to the regulator in the way it should be. What's wrong with that? Nothing. And my investment thesis, by the way, is that's coming and it's going to appreciate crypto assets dramatically. we've taken this as far as we can get without getting institutions involved. That's the best way to look at it.
Okay, so if you want to accelerate the appreciation of your crypto portfolio, you're welcoming the institutions and you're welcoming the regulation.
100%. You've got it.
Now, speaking of saving the world, you've also said that Bitcoin miners are going to save the world.
Yes, they are, and I'll explain that one. Clearly, when you read between the lines of the SEC memo regarding ESG audits, the whole crypto mining industry claims itself to be carbon neutral by buying carbon offsets. That's fine. But you can't find an audit firm that will sign that audit because the tracking error of carbon offsets is so large that there's no way to prove it. So, in other words, if you're manufacturing a piece of equipment and it uses a lot of carbon-based power, and you buy an acre of land in the Amazon rainforest and you claim that you're carbon neutral, no auditor is going to sign that.
So you don't believe in the whole voluntary carbon credit market taking off in general, then, it sounds like?
I believe it if the auditor would sign it.
Well, maybe it's just a question of regulation catching up with carbon credits, just like regulation has to catch up with crypto.
Ask any auditor. The minute the SEC makes it a mandate, a law, I think that's the end of the carbon credit business. It is such, excuse my language, it's all BS. That's basically what I think, okay? So that's not going to work. And it's worked for years because you got to say, hey, here's a carbon credit. The airline industry is never going to be carbon neutral, no matter how many carbon credits they buy, and everybody knows that. But until there's an alternative way to fly, we have to live with that. Bitcoin mining, on the other hand, there is an alternative way, and this is why institutional capital is going to go to the alternative way, and that is